If someone asked you right now, what are your auto insurance liability limits? Would you know the answer? Most people don't, and even fewer realize that number might be the only thing standing between their family and losing their home. The gap nobody talks about. Here's a scenario that happens more often than you'd think. You're in a car accident, and it's determined to be your fault. The other driver is seriously injured, and their medical bills, lost wages, and pain and suffering add up to $400,000. Your auto insurance liability limit is $100,000. That leaves a $300,000 gap, and that gap doesn't just disappear, it becomes your personal responsibility. If you own a home worth $500,000, that home can become part of a lawsuit settlement. Your savings, your future wages, and yes, even your house can all be at risk. This isn't a rare, far-fetched situation. It's exactly the kind of risk that standard state minimum auto coverage was never designed to handle. Why minimum coverage often isn't enough? Washington State requires drivers to carry a minimum amount of liability insurance. But minimum means exactly what it sounds like, the smallest amount allowed by law, not the amount that actually protects you. A lot of people choose minimum coverage because it's the cheapest option, without realizing that the real cost shows up later in the form of a lawsuit that exceeds their coverage. The bigger your assets, your home, your savings, your future earning potential, the more exposed you are if your liability limits don't match. What this looks like in real numbers. Let's say your home is worth $500,000. A reasonable goal would be carrying enough liability coverage to protect that value, plus some cushion for medical costs, legal fees, and lost income claims that often come with serious accidents. A common recommendation is to raise your auto liability limits to at least $250,000 over $500,000, meaning $250,000 per person and $500,000 per accident, rather than relying on lower state minimum limits. For many homeowners, that's a more realistic starting point. But even $250,000 over $500,000 may not be enough if a judgment is large enough, which is where an umbrella policy comes in. What an umbrella policy actually does. An umbrella policy sits on top of your existing auto and home insurance, providing an extra layer of liability protection, often in increments of $1 million, once your underlying policies are maxed out. So using the example above, if your auto liability limit is $250,000 over $500,000 and a judgment comes in higher than that, your umbrella policy kicks in to cover the rest, protecting your home, your savings, and your future earnings from being part of the settlement. Umbrella policies are often surprisingly affordable for the amount of protection they provide, especially compared to the financial risk they're protecting you from. A simple way to think about it: if you own a home, have savings, or have significant assets to protect, your insurance should scale with what you actually have to lose, not just meet the legal minimum. Raising your auto liability limits and adding an umbrella policy is one of the most effective, affordable ways to close that gap. Let's take a look at your coverage. Every situation is different. Your right coverage amount depends on your home value, assets, and personal risk factors. If you are not sure whether your current limits actually protect what you've worked hard to build, that's exactly the kind of thing worth a quick conversation. I'm a Washington-based independent insurance agent, and I'm happy to look at your current coverage and walk you through whether an umbrella policy makes sense for your situation. Reach out anytime, no pressure, just a real look at